Good morning, everyone. My name is Tim Lankford, and welcome to Gordon Marketing's Mortgage Protection Program. Every Tuesday. This happens every Tuesday. So what we are doing today is a continuation of last Tuesday. And I'm remiss if I don't tell you, and I'll share from my heart, because I know Alicia's heart, I know Jim's heart. They're a part of our mortgage protection program. Alicia is an incredible assistant to me. But we've got plans. Our plans are pretty strategic. Anytime that you speak to us, anytime that we try to put a program together for you, it's for your prosperity, for your future, to offer you a hope. So we like to put that as a disclaimer up front. So if you're not interested in any of those, you don't want to come to us, as I say with a smile on my face. This is a continuation. Last week I spent about 15 minutes going over our in-home. An in-home that has been incredibly successful. Everyone a part of this webinar today, you will receive a 6-step, a very specific 6-step to your successful presentation. You'll receive the script even that goes along with our in-home. We're here for your success. All that we ask is for you to hold your carriers with us. We like to say almost 100 carriers and over 1,000 products. We do everything from your life, final expense, simplified issue, your index universal life, single premium whole life, mortgage protect. My goodness, guys, 100 carriers with over 1,000 products. Let Gordon Marketing be your go-to company. Getting right into part 2. Part 1 last week, and we'll have this up on our website, www.gordonmarketing.com, here within the next week. Give our IT department a little bit of time. So last week's presentation for part 1 will be up, and as well as this one, part 2. Part 2, to get right into it without laying the groundwork again, I've got 15 minutes into my appointment. 15 minutes, I am going back and I am asking for their permission to continue. That's so important in our program. We want you to set your appointments when you're responding to leads, or if you're responding to a referral of a lead. We want you to emphasize, my job is to get information in your hands, set me down for 15 minutes. And be true to your word. Be a person of an integrity. And at 15 minutes last week into the presentation, I got both Alicia and Jim's buy-in of yes, we are interested in getting more information. Actually, they said, after I did my initial close, where I go into right after the 15 minutes, I go into my first close. I want to make sure that they feel good about what we go over tonight with my license for the state of, insert your state. It is able to give you a temporary agreement that says you're covered tonight. Should something happen to you tonight, we've got this mortgage covered. I want their buy-in. Wow, that sounds good. That's the program that I want. If you're going to get any objection about doing business tonight, they're going to give it right there. If you don't handle it there, the next 30 minutes is a waste of both of your time, yours and the family you're sitting with. Get their buy-in right there. They come back with something other than, that's the program we're looking for, that's what we're interested in, then pack up your belongings and say, after you get your other 16, if they come back and say, no, we absolutely have to get 16 other quotes, then you're wasting your time. Without going into objections, we will talk about that next week. I've got a couple agents who will be on this call next week, and they're just going to be shooting back and forth objections. And we're going to handle each one of them in a webinar that we'll do a week from today. So the only groundwork that I'll talk about this morning, or during my appointment this morning with Alicia and Jim, is what I have in my folder. I, of course, have the lead sheet. I've got my in-home form, which also shows a quotes of how I give quotes to the client. I have my ELF form, emergency list of friends and family, and I have in my folder for mortgage protection, whether you're leading with Mutual Omaha, Foresters, Fidelity Life. One of the ones that we are very proud of is Phoenix, mainly because of their ease of underwriting, the amount of simplified issue, as well as the price. All of those things, I'd lead with Phoenix for simplified issue term. In here I've got 2 term applications, 1 for each. I have 2 accidental applications. You'll see why I have that for Mutual Omaha. I have 2 children's applications. You'll understand that as you, and you'll be able to capitalize on that if they have children. All the groundwork, let's get right back into where I left off last week with Jim and Alicia. And then I'm going to be looking at this camera over here because we are going to be putting together this video for dissemination to other agents. Jim and Alicia, I understand that this makes sense to you, that this would give you a sense of maybe relief from what you just told me, that something happens to you. We talked about you, Jim, if you do not make it home because of some idiotic drunk drivers out there, that there aren't enough funds in place to make sure that Alicia and did I hear that you have 2 children?
2.
What are their names?
Emma is 9 and Ava is 8.
Ava and Emma. Oh my goodness. I have an Emma also. So how precious. How precious. So 2 children. You guys have some room to catch up. I've got 4 children, so real important. We've got to put out some good kids. You guys probably have seen plenty of ones that you want to question, but good for you for having 2 kids. Want to keep them usually, hopefully for the most of the day. Usually you want to keep them. They're not too much of absolute madhouse. Are they? Are they good children?
Every now and again.
Yeah.
They have their times.
Oh, good. I was hoping you weren't going to say that they were angels, and I'm thinking, oh my gosh, how much have we screwed up? But good for you guys. We were talking about how important it is to have something in place, and that's why I'm sitting here. I understand that. Should you predecease Alicia, that the girls and Alicia is able to stay in a home. Some other funds that I want to make sure that I cover, if you have something in a 401k or currently or in a previous job that you've left, to make sure that I don't ever want to suggest you to purchase any sort of protection for Alicia or for Alicia towards you. And we sometimes hear you don't want to be overinsured. So keen in on that. Funds in a 401k can also go back to make life easier, or at least sustainable for Alicia and the girls if you should predecease Alicia. With that in mind, a 401k, Jim, that maybe you're consistently contributing to right now, or currently contributing to, or one that you've left prior?
I think I have about 25,000 that's in my 401k right now.
Your current one. How about in a previous employer?
No, that's the only one.
Okay. Still at age 34, it's pretty young to be able to accumulate much, but I wanted to make sure to ask, right, so I don't overlook that. For you, Alicia?
No.
Not right now. Okay. And if I'm in a big picture world, I want to take a few thoughts just here to think. We want everything in place. Again, if you don't come home for Alicia and the girls, but ideally, if you have a very long life and you guys both live, to outlive your mortgage, we've got a couple other plans to be able to protect that. In other words, to be able to have a return of premium. For today, I want to be able to get a picture of your health and then maybe focus on just a very simple way to cover the mortgage and be able to pay off the house for Alicia and the girls, or vice versa for Jim and the girls. With that in mind, as far as health-wise, think back, and Jim, may I ask you first, kind of have you ever have you ever been on any prescription that has that the doctors prescribed, whether it be for blood pressure or cholesterol, or have you been diagnosed with any ongoing medication ever in your life?
No, the only thing that I'm taking is just kind of over the counter, as needed stuff.
Okay, so no medications ever, maybe some antibiotics or some little things here
Nope.
and there?
Nope.
Okay, wow, that's impressive. I've met with so many 34-year-olds, you may be able to relate as far as knowing they'll bring out a bucket. So, awesome. I mean, they'll say, here are my prescriptions, and my heart sinks a little bit. We're able to help them also. It's just, this is still health-based. Even though there's no medical exam, no goofy person coming out to stick your arm with a needle, home office still requires us to be able to put a protection in place with folks who are like you, very, very healthy. How about for you, Alicia? Anytime, ever, any consistent
Not ever.
medications? Not ever. Anything that you're taking right now from the doctor?
Nothing.
Okay. That good for you. That means a lot for your ongoing health, doesn't it? Very, 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 very good. And then, Alicia, how much do you smoke, hon?
I don't.
You don't. Okay. Jim, how much do you smoke?
None.
None. All right. And when you get into surgeries, have you guys had any sort of surgery? Probably childbirth. I would count that as a very traumatic event. But if you think of whether it be for organs or for any issues with things going on in your body that required a surgery.
Tonsillectomy when I was 8.
Okay.
That's about it.
Torn knee, ACL.
Kind of like a sports injury.
Yeah. That counts.
It doesn't. It really doesn't.
Good.
Anything that caused like an MRI or a CAT scan here in the last 5 years?
No.
Nope.
Very good. How about for, I have sometimes a tendency to have a little bit of a lead foot. How about for your driving record? May I ask you first, Alicia, my wife has got one ticket in her life, and I got that expunged by paying twice what the ticket was because I forgot to. And I remember getting so many warnings about renew your license, and literally the next day after it expired, my wife was pulled over. She was mortified. This was a couple years ago. She was 40, at least early 40s. Never even been pulled over by a police officer. I was in the doghouse. But
no.
I, at least in the state, in our state, seems like it's a little bit of a usury tax. But hey, pay twice and you can get this ticket expunged. So thankfully, she can still say she's never received a ticket. But how about for yourself? Have you have a tough driving record or?
No,
No?
I think I got a disregarding a stop sign ticket when I was 19.
Okay. Jim?
I had one ticket about 7-8 years ago.
Okay. So nothing of any significance in the last 5 years.
Nope.
Oh no.
Good for you guys. And then a criminal record. I mean, we've also made some goofy mistakes and goofy choices. Maybe going through college. Any felonies or anything like that, Jim?
No, thank goodness.
Oh, good for you. Alicia, the way that you responded, I'm going to take that as a no.
Pretty proud of that one. No.
Even going through college, I'm impressed.
Even through college.
Either one of you guys a military member?
No.
Okay. And citizens of the U.S.?
Yes.
Okay. Alicia, think of mom and dad, maybe on your mom's side, really either one. Are they all with you? Or are grandma and grandpa's all with you?
No.
They're not. None of them are.
No.
Okay, my goodness. Think of especially on either side, was grandmas still left, or was it one of each other? Who died first?
My dad's side, I never knew either one of them. They died before I was even born.
Okay.
Well, no, my grandpa died. Maybe I was 2. But on my mom's side, my grandmother was left after my grandfather about 5 or 6 years.
Okay.
After he passed away, she lived for about 5 or 6 more.
Do you know if they had a plan? This is nothing new. It's for mortgage protection. This type of protection has been available for over 100 years. So when I say even for Grandma and Grandpa, it would be very, very feasible that they had something like this in place, or even sometimes, more of a traditional life insurance, whereas focus today now is for people usually to live on life insurance and have an extra protection on, hey, let's just use that to pay off the house, live on life insurance. How was Grandma after Grandpa passed on? Was there anything like this in place?
No, the house was paid off.
Good for her.
The house was paid off, and she was on a fixed income. My mom and her sisters and brothers helped take care of her. So.
Okay. So if something like this, then it sounds like was in place, it may have made life a little bit easier.
I mean, financially on my aunts and uncles and my mom.
Sure. And probably on the pride of your grandma, too.
Probably.
So, understand. How about for you, Jim? Grandmas and grandpas on both sides still living?
No, they're all gone.
Okay. I'm there with you. I can relate with that. I'm sorry to say. In your case, did grandpas die before the grandmas, or vice versa?
My mom's side, my grandpa passed away first, and then grandma. On my dad's side, it was the reverse. Grandma passed first, and she passed before I was born. I never even knew her.
Okay.
So,
in both of those instances, do you remember how life was for the grandma and the grandpa that survived their spouse? How life would they have had? Did they have something like this protection? Something like this protection in place?
I don't know what on my mom's side anything that they had, but I think on my dad's side, I think they had some small life insurance policy. I don't know for sure, but I think they had something. Maybe about 5,000-10,000, nothing major.
Okay.
So he passed away. My grandpa on my dad's side passed away when he was 98, so he had a good long life.
Sure did. Wow, what a blessing. And then the grandmother that survived, how was her life?
Well, she ended financially. I have no idea what she had.
Okay.
She was in a nursing home, assisted living, and so I think a lot of her money went towards that care.
Okay. That exercise, why I do that is more than anything else to keep us thinking, just like what you guys had shared of how difficult life would be right now if you went out and you got a gallon of milk and didn't come home because of that idiotic driver. Same way with thinking back and looking at moms and dads. I know with my mom, when the 6 children, I've got 5 brothers and sisters, we were mom's continuing financial support, which we happily did, but dad passed away and didn't have anything in place. And then even a little bit closer to home, my oldest brother, the 5 of us brothers and sisters paid for the funeral and the everything that went in association with that, the casket and the gravestone, the grave plot, because he didn't have anything in place and no funds, and so it was the 5 of us that was we were supporting that. So I applaud you on one major hand of saying, hey, this is a very nice, responsible thing for you to be doing, because there's a lot of folks out there that want to do this and sometimes think it's so overwhelming. As we move from here, I'm going to give you guys one price each. One price for you, Alicia, that would put all the funds in place to pay off the house for Jim upon your death, which would not be that unlikely to die before the man. I know we always say, well, the man is supposed to outlive the woman. We also say the parents are supposed to outlive the children. And I think that every night with my 4 children, it's just like, I don't even like to think about it right now. But, thankfully we've got some things in place that would help them until they become responsible enough to have a policy on themselves. We've got something to make sure that we can do a very dignified burial if at all needed. Alicia, with everything in mind, I'm going to give you, show you guys what I'm going to do here. We're going to focus in on Right now, there's 75% of the mortgage. You've got $234,000 mortgage. I'm going to call 150 of it, maybe a little less than 75%. I'm just going to put 150,000. We're going to talk about that on an accidental quote, and also a price for what I call full value, so that if you should die of an accident, it's basically going to double what we have in place for a full term, so that if you die, period, this covers everything. The accidental quote that I'll give you is just the least expensive coverage that you can keep on yourself. So I feel like I'm not doing my job if I don't at least give you this quote. But I'm going to give you one quote each, and we're going to talk about how that fits in the budget. So just so you can see what I'm doing here. So if we're looking at $150,000 on the accidental, and again $150,000 on the full value. And for you, Jim, I'll put your pricing here. And Alicia, we're going to come back and look at yours over here. So, looking for a accidental for you, Miss Alicia, for a 29-year-old, state of Indiana. And this would be anything that you would pass away with due to an accident, whether it be in a car, in a bus, in an airplane, or working in the yard. It doesn't matter. Anything that you would pass away with in pertaining to an accident would be $19.36. And for you, Mr. Jim, and the blessing of this also is you guys don't ever use this policy. And this policy is in place for you, Jim, for the next 46 years at that price. And for you, Alicia, it is, 36 years. And for you, Alicia, 41 years, and that $19.36 a month. You don't pass away, all that money gets handed back. So I really like that for both you guys. But now let's go over here and look at what I'm going to call the full value. So this one would be, this is accident only, but then we're going to look at a protection that if you die of a heart attack or cancer, anything that this isn't going to cover, this portion will cover everything. And let me pull that price up for you guys.
So an accident is not included in that?
Yes,
oh,
it
okay.
is. I'm sorry. This includes everything.
Okay.
This would be just accidental.
Just accident.
Good. Thank you for that clarification. So if we look at, again, for the state of Indiana, and age 29. We're going to look at $150,000 for you, Miss Alicia. So for the duration of your mortgage for the next 30 years, yet we talked about how that you can lessen this. So for the next 30, as far as doing the bi-weekly on your mortgage, and be able to save over 7 years on your mortgage payments. But we're going to just still take this out for the full 30 years. At this coverage, you can cancel it whenever you're not needing it anymore. However, you could still carry it and you'd have $150,000 even without a mortgage. So it's independent of the mortgage once you're approved for it. And that would be for you, Alicia, and then let's go over and look at for you, Jim. for you, Jim, is $34. And then I'm also going to, for Ava and for Emma, just for something for you guys to also think about, and it pains me to even think about it, but I have a policy on my Emma also for just the emergency case that should ever come up. And then same thing, I'll put in the state. If you're ever looking for any part-time work, Jim, this is as difficult as my job gets, to be able to sit with folks
Really?
and to be able to point and click. This is as difficult as it gets. So you, or to be real frank with you, she would be incredible to sit with people and do this. It just, so if you ever think of some
I don't think
part-time
I can
work-
do what you do.
Really? Oh my goodness! You're going to give me some real pride here of saying, really, is it that difficult? But if you don't think so, I'm always looking for some folks to. We get so many of these responses, folks asking for us to protect their mortgage. In all sincerity, if you think about it, you guys will have my cell number, my email, and I would be very interested in talking to you about it. Should that ever come up?
I would like to have an 8 to 5 job.
Fair enough. And you said 8 and 9, right, Alicia?
Mhm.
Okay. And then, so if we look at for $10.50 each for the girls, would put 25 would be put a total of 50,000 in place. 25,000 each. So if we look at all of our numbers, for you, Mr. Jim, we're looking at $64.96, and for you, Miss Alicia, we're looking at $49.39. $49.39. So if we look at that's approximately 105 plus 20 here, so we're looking at approximately $125 a month, and that puts $350,000 in place. So you have $350,000 of protection for about $4 a day. How does that work in your guys' budget?
Question.
Yes, sir.
You said on this accidental that after the whatever time period, 36 years or something, you said we get all the money back.
Yes, sir.
Do we also get the money back on this full value, what you're talking about for 30 years?
You do not. We do have that available. I'm trying to keep it as within a price range that allows folks feel fairly comfortable with. If you wanted to consider something like that, you would take this dollars and you would approximately double it. So we'd be talking about $185 instead of $125. But excellent question, thank you. So that is available. We would just be looking to add a little bit. What I like to do typically is, because each year, and once you're in my family of clients, you'll get a call from the office of, hey Jim and Alicia, it's time for your annual review. And at that first year, after you're already used to making this payment, then I'd like to bring that up and say, here are some other options we could do. It's easier at that point maybe to come up with an extra $2 a day versus trying to add another $2, to add another $60 to the $125 we already have on the table. But you direct it, whatever makes the most sense to you in your guys' budget.
The full value, does that include accidental? Like if we die of an accident on this, so why would we need this?
Because you have, for almost half the money, the same amount of coverage. This will cover you for 30 years. This will cover you for over 40 years.
Okay.
Here, you get all of your money back. Here, it's kind of like buying protection, but it is a temporary protection.
Okay, I see.
But if this gets to feel like, wait, that doesn't make enough sense, then yes, we would pull this off
Okay.
and just look at what is budgetable, what makes sense budgetable.
Well, we were actually discussing this before in terms of what's in the budget, and we were thinking closer to about $100.
Okay.
But it was just the two of us. I mean, we don't have anything on the girls. So, you know, that's another piece that we hadn't thought about. So, I mean, thank you for bringing that up. I think it's important to have something on the kids.
Mm-hmm. Definitely.
What do you think? Think we can scrape another $25?
I think so. Mm-hmm.
Yeah, that sounds good.
That sounds good.
For 350,000, yeah.
We've got a little bit of paperwork to take care of here. I did not mention that these protection policies are in place for the rest of their life.
Oh.
So this $10 never increases.
Oh.
And you know, by the time they're in their 30s and 40s, they'll have over $1,000 in these policies that they could, or at least let's say several hundred, that they could also take out as a loan, or they could just cash it out. Preferably when they're in their 60s and they have $25,000 that they're only paying $10 for. Hopefully,
right.
they make that wise choice. You know, when you guys say, "Hey guys, here's a couple policies for you," you're never going to be able to find anything this inexpensive.
Yep.
And then there's also some other blessings that we didn't go over in your guys' protection in here as well. The company that you are that our home office, this $150,000 comes with living benefits, which means, well, goodness, what is it? Over 50% of the male, before age 50, over 50% of them will have some sort of critical illness, either a heart attack, either cancer or stroke, before age 50. So, I love your age, Jim. Don't blow past that age. Don't ever thinking about it. Don't ever even think about it. However, when that does come, at least you know that you have something in place that will be able to access that $150,000 up to 95% of it. So in other words, if you have that critical heart attack, you're laid up, you can't work, the doctor is saying, Alicia, I'm concerned Jim's ever going to get back on his feet. You can, the idea is to try to keep that money there so it will help pay off the house. However, you can request a check for 50%, 75%, or 95% of that, and depending on the life expectancy, the severity of the illness, you could be granted as much as 95% of that $150,000. So those are several things. Whenever we get your approval, whenever the policy will be delivered to you, but I'm going to be following up with you. My office will be following up with you, so that when you get those policies, we're going to sit down and look at them together and be able to go over all of these, because you each will receive an accidental policy. You each will receive what I call a full value policy, and then each of the girls will have their separate policy. So you've done a good thing here. We'll start the paperwork. The only thing that I need from you guys is your driver's license. Okay. So as we get the driver's license, this is where I'm going to go into a little bit of how I close. Because this is also a part of closing. You've got to make sure that it's an easy transition into your applications. Don't start pulling out all the applications and make this a big foo-ha-ha. Keep it real simple. I want to focus on one of them first. I'm going to focus on Alicia. And so as I pull out, now I already know most of Alicia's medical background. I know she's not a smoker. I know she's never had anything to do with cancer, heart attack, or stroke. But I'm going to be going through those questions again on the application, just to dig again a little further. It doesn't do you any good if you blow through the application, and I call a health questionnaire. I don't get into and say, okay, now is the official time to get you this application in place. downplay it to the point where you're user-friendly. The more user-friendly you will be, the more these folks are going to be comfortable, because this is going to lock in this sale. I haven't locked it in yet. I've done the shake of hands, and that still goes a long ways. You've done a good thing here. But I don't want to say, okay, I need your checkbook, I need your driver's license, we're going to go over your social security number, we're going to go through your medical history. Okay, you get the feeling here, right? So what we're going to do is just ease into, hey, I just need your driver's license. That's it. Then we build from there. So, and on your if you're running this by one of the leads, this is real easy time for you to go into your application. You pull out your application, and remember, I have 2 term, 2 accidental, 2 children, and I also have 2 final expense, because sometimes it's not always mortgage pay off everything. Sometimes it's mortgage payment protection. Dramatic pause. Mortgage payment protection. Understand what that means, though. If Jim was unhealthy and yet I could get him final expense, which is easier to get approved for than the simplified issue term, then I'm going to focus in on those health questions, which are so crucial. When you're going through these, you should be in your mind checking off, okay, he'll qualify for that, she will qualify for this, so that when you get over here, you've already got in your mind, before you start talking up, okay, I'm going after 150,000, and there's a reason why I'm going after the 150,000. I want to be in that home. I want to protect the children. What I've got right here, guys, count them up. 1, 2, 3, 4, 5, 6 applications. If you remember, about 3 weeks ago, I went over and said, how do you become a 6-figure earner in this business? You do it by putting multiple applications in the home. You do it by looking at approximately $100 per buying unit. Now that sounds a little cold and crass, but that's what I do. Whenever I'm sitting with any family, I see the one spouse is $100 and the other spouse is $100. If depending on the house that you're in, depending on the neighborhood, try not to let any of those things fog your thinking. I've sat in plenty of trailers where I thought, immediately I start thinking, goodness, they're not going to have 2 nickels to rub together. You know the attitude that we so quickly get. And I have come out of there with some of my largest premiums. Now, I just helped a gal down on the south side. She was in an RV park. That's not even a mobile home park. It's an RV park. She lives there full time because she's thinking, that, hey, anytime that I want to be able to move out, I don't have to take care of the yard. Anyhow, RV park, making $40,000 at the VA hospital here in Indianapolis. And I came out with a $100 per pay period. Guys, that's $216 a month on my federal employee. 51 years old, totally said, I need more protection on my life for my retirement. Different animal. That was not for face value. That was to create her bucket that she can access tax-free. Anyhow, try not to go in with too many preconceived ideas. $100 minimum on mortgage protection. On the federal side, we'll talk about that here in a few weeks, but the average right now is $100 per pay period, just across the nation. So different attitude, but same mindset. Your mindset will determine how much you're going to make in this business. Please let that sink in too. Your mindset of, am I going in there because I've got commission breath? I'm going in there because I need a sale from Alicia. I need a sale from Jim. Or am I going in there, these folks need my help. So this is a response form versus a lead, in my humble opinion. This is a response form that I also call a sale. Let's summarize real quickly. When you get into your application, again, you know that you're going through and you've got most of the questions, so get to the meat of the matter. This, again, should be almost completed, the inventory that you've already done in the home, the questions you've already asked them. And then as I transition into the payment, I go right to, okay, Jim, this is going to be for you on the full value, $34 a month. Do you want that to come out of your checking or your savings account? I'm not saying, hey, I need you to write a check out to Phoenix Mutual Home on Forester. It doesn't matter. I need you to write a check out. And now we're going. No, keep it real simple. Do you want this to come out of your checking or your savings account? And then also address it here. Oh, I don't like those automatic deposits or automatic withdrawals. We need it to be an automatic withdrawal. The least stay on the book policy out there is the quarterly payment. The least one of the types of withdrawal out of a person's account that gets canceled more often than any of them is a quarterly payment. So even if you collect 3 months right now, the next time it comes around, Jim's going to kind of forget about it. And then he's going to see that his bill is going to be, instead of $34, it's going to be $106. The one that's going to get canceled the most is your quarterly payment. So I do everything I can just to ease them into that monthly draft. And to say, we're dealing with a multi-billion-dollar company, each of these. And I don't need to talk about different companies. I don't need to talk about even the carrier. I talk about, if you caught my emphasis, home office. This is a big life insurance carrier. No, don't go there, guys. My home office. So your home office will now be with living benefits, Jim and Alicia. The home office will be able to provide policies for Ava and for Emma. Home office, you get the picture. Don't go down the life insurance. You're not a life insurance salesman in this business. You are a mortgage protection specialist. Mindset, call it what you want. I do this business 1 to 2 days a week. And you know my story. I make over 6 figures helping people 1 to 2 days a week. If you are doing this business 3 to 4 days a week, guys, you should blow the numbers out of this world than what I do. Simple issue, simple application, not so simple payback to you. Guys, I hope that helps. I'm going to go from my full value. I attack that first. Going to pull out, and oh goodness, the children's applications and the accidental applications. I like that from Mutual of Omaha. You can contact Alicia at gordonmarketing.com. She will get you contracting for Phoenix, for Mutual of Omaha, for Foresters, American Amicable, Transamerica, you name it, we've got it. We're going to still focus mainly on Phoenix and Fidelity Life for mortgage protection. When you go to the accidental, very few companies out there do the return of premium. So that's another reason why I go to Mutual of Omaha for the accidental. Very few accidentals out there guarantee issue. Follow that. Doesn't matter their driving record. Doesn't matter their health. The accidental, so if everything else was too expensive, I'm still going to go back to that accidental. And I'm thinking, I may have misquoted, I don't know if that was $30 for a 34-year-old accidental. You've got the body of it, but I may have even misquoted that. I think Jim's accidental may be a little bit less for that $150,000. But remember, that's return of premium. So when you're pricing and saying, "Oh, Tim, you goofed up," don't remind me. I think I do that at least once a day is my quota. But make sure that you're seeing that as return of premium. So when they get to 30 years with an accidental, and that is only good for somebody who is less than 50, because the accidental, if I remember, is going to go to age 80. You can't put it on anyone after age 70. So really at Jim's age, this will be good for 46 years, guys. But after 30 years, he can apply for, or not apply for, he can get all of his money back if he doesn't want it anymore. Or the day that they either die of an accident, or if they, of course, want to have their money back. For Alicia, guys, that's a 51-year policy for $19, guaranteed $150,000, will never increase. I like the accidental. The children's applications are a no-brainer. As you heard, they're concerned. I'm concerned. You remember the previous video where I talked about the dad and his 18-year-old daughter coming back from the graduation? That was real. Make sure you weave in real stories. That's why I talked about my brother and his funeral. That's why I talked about my mom and dad. Make sure you're user-friendly. I'm not trying to be ooey-gooey, but this is an emotional sale. I guess I'll close with that. This is an emotional transaction. This isn't a black and white, here's the pros versus cons, okay, sign here. Connect with your people. Care about them. I guess, can I keep it that simple? Care about them. Allow your heart to bleed, bleed on your clients figuratively, versus asking them to bleed for their insurance. That is a mantra that we've held for since we've been doing this, now going on 2 years, through Gordon Marketing. Bleed on your clients. Don't ask them to bleed for their insurance. You've got 3 directives I'm going to leave you with. You remember, directive number 1, go blow up your income. If you want to be an agent who's going to make it happen, I've got 4 agents this Friday on our call. You want to plug into Friday's call. 11 a.m., this same platform, the GoToWebinar platform. 11 a.m. this Friday, you get to listen to 4 agents who across the country, and actually even off of the country, at least off of the mainland, to be able to share from their perspective of how they're making it happen. You make it happen by directive number 1, blow up your income. Number 2, you make it happen because if you're married, or if you have just children, or if you're planning on a family, make it happen for your family. Put them in the house that you feel the safest in, the neighborhood that's the safest. Make them, be able to put, my daughter goes to Heritage Christian School. She's going to a school that's private because I made number 1 happen. So number 1 takes care of number 2, right? Guess what, guys? If you will be an agent to follow directive number 3, number 1 and number 2 will always follow. What's number 3? Number 3, be an agent who's making it happen for this family in the field. For those families who send in a mortgage protection request, for those employees who respond to our contacting them and they're saying, yes, I am interested in knowing about my benefits. Number 3 directive takes care of number 1 and number 2. Number 3 directive is you take care of that family in the field, that employee in the field, and number 1 and number 2 always follow. Guys, gals, go be an agent who makes it happen. Talk to you on Friday.